Joining us now to break down what investors were trading, JJ Kinahan from TD Ameritrade. JJ, great to have you join the conversation here. I guess let's start a little bit with where you did see some of the biggest activity, be it buying or selling by investors on the platform last month.
Well, I thought it was interesting. You know, Mike just talked about the fact that there's confusion. And I think one of the things that we've seen from our clients the last couple of months is not a real hankering, if you will, to take a lot more exposure to the market. It is interesting that last month, for the first time in a while, they were actually net sellers of equities, more into fixed income, et cetera, than we've seen in the past. And when I look at the stocks they did buy or sell, it comes down to two themes for me. Number one, buyers of Apple and Microsoft. Well, you know, Apple and Microsoft tend to be stocks that our clients trust at all times. But it was interesting in the month of July, they were sellers of Apple after they had good earnings, kind of proved themselves afterwards. Our clients go back to it. And then on the other side, sellers of Tesla, while at the same time buyers of Ford and GM. So, you know, obviously in the EV space, it seems to me you're continuing to see that heat up. We know Ford and GM are really good at distributing cars. And so it's just kind of interesting to see that. And then the last theme was we see that our clients were buyers of NVIDIA while sellers of AMD. So, you know, you guys just got done talking, Morgan, about rotation, et cetera. It's interesting to see some of the names within the individual sectors that are also being rotated in and out of without actually taking, shall we say, you know, more outside volatility risk.
So gauge for us, JJ, the extent of that net sellers in equities. Have you seen quite a meaningful change in direction? Are they less overweight or less invested in equities than they have been for many years, or is it just at the margin?
I think it's a little bit more towards the margin. In general, you know, when retail clients in general tend to be a little bit more to the buy side than to the sell side, not perhaps as much as people make it out to be. It's a pretty fairly even mix. So when they do switch to the sell side, it is a little bit, in my opinion, anytime they do, it's news, Wilfred. They don't, you know, go crazy in normal times where it's a huge shift. But any shift, I think, is interesting, and it really points out, I think, a big theme of the panel you had today, and that is there is a little more caution in the air as we head into September, obviously because of some of the historical things we're seeing. But now, you know, we're unclear what the Fed's going to do. We have this risk of, I think, the Fed not really doing much else from now till the end of the year. So that means other stories can cause volatility. We don't have earnings for really in a meaningful way for a couple of weeks. And that always leaves us open to a story we don't normally think, perhaps being the one that touches off some volatility. And I think investors wisely from TD have decided that, you know what, I'm in a good position. I have the positions I kind of want on. And as I said, it's interesting to me that they stayed very much in the same sectors without going towards some of the stocks that have been high flyers or had more volatility to them recently.
JJ, it's been a very robust year in terms of companies going public, whether it's the IPO pipeline, which I realize took a breather in recent weeks, but is expected to start back up at a pretty strong pace through the end of the year, or whether it's some of these companies that have merged with SPACs. Have you seen activity, I guess, in general, but also just changes in activity? And to your point, when you talk about things like caution, for example, around some of these more newly public companies?
Yeah, you know, I do think, Morgan, as we look at that, there's obviously, again, the more well-known a company, obviously, the more our clients will participate in the IPO overall. We see a broader base of people participating in IPOs than we've seen in the past. I do think SPACs are sometimes a little bit of a tougher sell, only because people don't fully understand them, and with that has people back up a little bit, as much as we, along with many others, try and educate them on how they work. And so with that said, I do think you're seeing a change in behavior of people. One of the things I think that's happened with this incredible rally we had and with some of the meme stocks, et cetera, it has made people, and we look at our education statistics to see this, it's made people more curious about products that probably they weren't as curious about before. I mean, look at how much more you're talking about options on the network on a day in, day out basis, even compared to 5 years ago. Obviously, products like that have become much more mainstream. So as you start to see some of these other products and the IPOs, et cetera, you'll start to see people doing their homework to try and learn about them so that they can at least have the option of adding them to their portfolio.